Real estate is a business. You, as a 1099 slated individual, it's important for you to realize that when you're earning commissions-based monies, commissions-based 1099 income, you being able to navigate a tax landscape without prior withholding taxes can seem kind of overwhelming come the end of the year, right? You got a great big number. Look at all the money that I made this year. Look how well I did in real estate. And then, bam, if you didn't plan accordingly, if you didn't know how to navigate the wickets, you're going to hit a wall and you're going to hit it quick. If you're able to maximize legal write-offs, tax write-offs, as a real estate agent, it can become vital in reducing your overall tax burden. Deductible expenses is what I'm referring to, such as home office costs, vehicle expenses, marketing investments, professional fees. These can all significantly lower your taxable income. What we're going to talk about today is going to help you diminish these fears a little bit about, what do I have to do? How do I do this so that Uncle Sam doesn't hit me with a hefty bill come tax season? First, we probably better define for a lot of you, because there's a lot of new agents that follow the show, what are real estate agent tax deductions? Individuals and businesses are taxed at a certain percentage, and that's defined by their taxable income. You want to reduce the amount that you are taxed. You want to lower your taxable income as much as possible simply by using and deducting the expenses that are set into motion and set into tax law for us here in the United States. Uncle Sam's job is not to take every penny that you earn without giving you credit for what it cost you to do business. And that's kind of the simple formula. If it costs you that money to do business, if that's the cost of doing business in your business model, chances are there's a deduction or there's a tax credit to offset or something to that expectation given to you by the federal government. And if you're doing your taxes on your own and your taxes in real estate are complicated, suggest you consult a tax professional, right? We're not lawyers here. We're not tax advisors. We're not tax securities agents. We're certainly not accountants, but we deal with enough high-power investments that we've learned a trick or two. So today we're going to talk about exactly that. And for expenses to qualify as real estate deductions, they generally have to be considered necessary or ordinary for the business context. Give me an example. If an independent farmer were to itemize their tax deductions, their animal feed, the food that they need to feed the animals that they're farming, is going to be deemed necessary and ordinary. The IRS sets specific criteria for what can be deducted for a business based on that profession and expense type. They've done years and years of research. They've done years and years of tax assessments with real estate agents. They know what makes sense for you to be able to do your business. So why should a real estate agent even claim tax deductions? Most agents working through a brokerage are provided a 1099 form, which means not only is this your commissions and they're not instantly taxed when you get them, but you're also considered a non-employee of a brokerage and you pay self-employment taxes on any source of income that you have. Therefore, you want to make absolutely sure to maximize as many of these deductions that are allowable for real estate agents so that you can lower that overall burden. Agents and brokers typically incur various expenses. Most of these expenses are related to business activities, traveling to properties, marketing listings, maintaining an office space. By you leveraging all of the available real estate agent tax deductions, you will be able to ensure that you're not overpaying on your taxable income. A little shout out to QuickBooks. Unless you're running a $1,000,000,000 business, QuickBooks is a pretty easy and a powerful tool. It will significantly aid real estate agents managing their personal finances and tracking that tax deduction efficiently. This type of software is going to allow you to categorize expenses, monitor your income streams, store your receipts digitally. This keeps precise records through QuickBooks. It'll ensure all your deductible expenses are adequately captured throughout the year as you capture them. You don't have to try to figure it out at the end of the year. It's all ready to go. This can be especially helpful whenever you're preparing for tax season. The agents can quickly run detailed financial reports that way, and they can provide a clear overview of potential deductions. Let me throw this up in the air for you. A real estate brokerage is not responsible for claiming all of your deductions or giving you an itemized breakout. They are responsible for making sure you get paid the commissions you've earned. And typically you'll get some kind of statement every time you close a deal that is the itemization record from the brokerage of how much business you have done. You should calculate that up yourself throughout the year and then break down what it costs you to get that business, to earn that business, to travel and maintain that business, to market that business. Every single one of those commissions had a cost of doing business. And that's what you should be concentrating on. Get yourself a scrap piece of paper, do whatever you got to do, but I'm telling you, software like QuickBooks is going to make it easy for you. So do not lean back on your broker. Put them under additional pressures because you don't understand how to break your taxes out. It's not their responsibility. They've got their own deductions and their own costs of doing business as a broker and a brokerage. And most of them that are active agents even had that additional stress as a 1099 agent form. So understand what's your responsibility and what's theirs. You're running a business. As a real estate agent, it's yours to own, manage, etc. You partner with a brokerage to get business done according to the way that real estate is laid out these days. So make sure that you're doing your job throughout the year so that when the broker gets you a 1099 based on the commissions that you have earned throughout your calendar year, it's going to be easy for you to break out your taxable resources. So what we're going to talk about today are some of the tax deductible items that maybe you are, but probably not thinking about, that you should be tracking throughout your year. This way you can use these when you're filing your taxes at the end of this year. Check these boxes, make sure you're doing it. Make sure you're tracking these coming up to the 2025 season because these will help you a lot come the end of the year. So let's talk about some of the tax deductible items. Real estate agents will greatly benefit from understanding and using various real estate tax deductions specific to the real estate business. Those are the deductions that are tailored that'll offset the cost of real estate activities. These are inclusive of expenses for donations, continuing education, licensing, home office expenses. By taking advantage of these opportunities, agents can reduce their taxable gross commission income, your GCI, and lower your tax liability. So if you're wondering, what can a real estate agent write off? Let's break it down. The easiest one for everybody to remember is your home office expenses, right? Not everybody has to go to a brokerage every day to work. We're not an industry that has to be inside of an office to get things done. Certainly, there is a huge advantage and benefit to having an office to learn and train in when you're just getting into this industry. You being able to surround yourself with other agents that are busy trying to learn so that we can learn from each other. You can attend classes in person. You can meet with the brokerage and with the broker on a one-on-one and with some of their mentors and advisors has a great advantage to you, especially while you're growing and learning where in the industry you're going to be the most successful. But your home office that are added on your Schedule C, line 18 of your filing, allows a real estate agent to deduct costs that appreciate with maintaining that home office, especially if it's your principal place of business, and typically it will be. Deductions like this one can include a portion of your rent or mortgage, utilities, insurance, office maintenance, and in 2024, agents were able to choose between a standard deduction of $5 a square foot at a maximum of 300 square feet for an office space and itemizing the actual expenses based on the percentage of home used for the business. If you're using 50% of your available space, fantastic. You can do that. The next one you want to consider is your vehicle expenses. There's no way that you're just sitting on virtual calls all day long or working from your office 99% of the time when you're really in the throes of it and you're either showing properties or going out and getting listings ready, you've got vehicle expenses. Suppose an agent uses their car for business purposes. In that case, they can actually use a vehicle deduction. This is line 9 of your Schedule C. The deduction is only available if you're going to use that car exclusively for business. You can deduct the vehicle cost, you can deduct the mileage, you can deduct gas and any repairs up to $28,900 for this tax season. However, if you used it for personal and business, you can only deduct the costs associated with the portion used for business by considering a business mileage. So there's no cap on how many miles that an individual can deduct, but you do have to track them and you have to be able to show that it was business related.